Today on NerdOut, Obymare. Welcome back to NerdOut, the show where we take a look at Cardano and we break it down but don't dumb it down. Today we're going to be joined by somebody new, Brandon from the Obymare team. So let's pull him up to the stage. Obymare is a new algorithmic slash, well, we're going to ask him questions about it. It is a stablecoin on Cardano. We'll let him get into exactly how it works because it doesn't fit into any of the categories I've seen so far. So Brandon, introduce yourself. Tell us a little bit about yourself and kind of how you got into Cardano development.
Yeah, sure. Hey, everyone. So hopefully my audio is coming through clearly. My name is Brandon. I'm the founder of Big Blimp. Big Blimp is a blockchain development firm. We are building on Cardano. We've been here for approximately 3.5 years or so. We have a suite of products that we're focused on. But the topic of today is Obymare, which is a CDP-based stablecoin solution hybrid coming onto Cardano. So it uses a lot of the foundational design cues from Liquidity, which is a well-known and very respectable stablecoin solution on Ethereum, as well as taking a lot of the strengths and looking at the strengths and weaknesses of various other solutions and sort of just bringing it together, sort of having this approach.
Yeah, that's kind of what I saw when I took a look at your life paper, and I saw you kind of had this three-pronged approach, and you were looking at strengths and weaknesses of each one. What are some of the things you took or ignored from each of those categories? You had 3 categories, I think: fiat-backed, algorithmic, and
CDP-based.
CDP, yes.
Yeah. No, absolutely. Yeah. So there's a concept known as the stablecoin trilemma, which is very similar to the blockchain trilemma. In the case of the blockchain trilemma, it's this three-pronged issue where if you're building a layer 1 blockchain solution, you have to choose 2 things between security, decentralization, and finality, speed, in other words. We have the same concept, I should say there's the same or a very similar concept in regards to stablecoin solution. You have, again, these 3 aspects, whether it's scalability, whether it's stability, and also with the final one, decentralization. Right. So these are the core. Three things with the stablecoin trilemma. Generally, there's 3 different types of categories, 3 main categories of stablecoin solutions. You have your fiat-backed, you have your CDP-based, and you have your algorithmic. Each one falls into 2 of the 3-pronged sort of approach. With Obymare, we are hoping to sort of like touch each pillar, and we're trying to get this sort of hybrid approach, right? So just very quickly, with fiat-backed solution, because of the fact that it's fiat, it's just, it's $1 in a bank account somewhere. It's very capital efficient, thus it's very scalable. So that's one point. And because it's also fiat-backed as well, it's not decentralized. But at the same time, it's also stable as well, right? So you get this stability as well as you get scalability, but you lack decentralization. So that's the trade-offs with fiat. Still, obviously, has its use case and et cetera, and there's obviously nuances, et cetera. A lot of people would say it's a
offboarding would be one of the positives. You can offboard to cash.
Exactly. A lot of integration. I mean, we see it with USDC, USDT. A lot of integrations there, and it's one of those things. But yeah, so, and obviously Algorithmic and also CDP-based solutions also have their negatives and positives and drawbacks, if you will.
Cool. So talk a little bit about the CDP as it compares to Algorithmic. Like, what would a pure algorithmic stablecoin look like versus a CDP stablecoin?
Sure. So algorithmic basically just refers to it's this kind of umbrella term for just systems that play as a whole. So let me just sort of back up a bit. So CDP-based stablecoin solutions, CDP stands for collateralized deposit position. Yeah. So they're basically just a stablecoin solution made by the sum of many individual positions that users are taking as a loan position. So it's interesting because with these CDP-based solutions, you almost have this sort of two sides of the same coin, right? You have this leverage aspect where people are depositing, say, ADA, Ethereum, or whatever sort of collateral types accepted in the system. They're minting, right, or borrowing through the system this sort of synthetic asset, right? That's usually pegged to a dollar of some sort. It can be USD, it can be euros, etc. Right? They're then selling that off in the general market, and someone is obviously buying it. So someone's actually acting as an indirect supplier in this case, right? So you have this leverage aspect that's kind of on the system itself, but through that leverage aspect and that sort of it keeps all the volatility there. You have kind of this synthetic asset, right? That's minted that keeps the stability. So it's an interesting system there. With algorithmic stablecoin solutions, you have examples like the JED. Off the top of my head, people are very familiar with them, Cardano ecosystem. You also have SIG USD on the Ergo side. And you famously have the Terra Luna situation, right? Algorithmics, again, umbrella term for just these different sort of system-wide sort of solutions, right? You generally have the reserve, the burning, depositing, etc. You have it acting as a sort of system basis, right, if you will. So like again, there's variance to this, but generally speaking, the supply and just the contracting of that supply is kind of just it's inbuilt into the system itself, right? And it's based on various metrics of like, is there enough demand for this, or is there too much demand for this? And also the fees also sort of range with that. So with the JED, for example, people can deposit the ADA, they mint one the JED. There's obviously a fee to do that as well, and there's an over collateralization ratio, which over collateralization just means there's more value being sort of backing the debt being taken on, right? So just kind of like a buffer of safety, but there's an over collateralization, or I'll say CR, of 400+%, right? So it's quite stable, but at the same time, obviously
very over collateralized. What is the collateralization ratio of Obymare?
Yeah, so Obymare is 130%.
Okay,
so it's fairly market standard.
So it's a little bit further down on that capital efficiency scale, which is good.
Yeah.
So yeah, let's back up a little bit. So how did you get into, or why did you start Big Blimp, and why Cardano?
Yeah, no, good question. So Big Blimp wasn't even. It's been a number of things. So initially, I got into the space in general when I found out about Bitcoin. I believe this is around 2020, 2021. Bitcoin had sort of reached all-time high prices. And, at some point, I heard about Bitcoin before, but I never really looked into it. I always thought it was some sort of, weird gambling thing, truthfully speaking, right? Because it just didn't make any sense why this virtual asset was so expensive in value, right? I just thought it was just, a bit of that. And I started looking into it because, at that point, the price got into, I think, I can't remember what the peak of 2021, I think 60,000 or so, or around that sort of range. And once I looked into it, it was a mixture of surprise, being quite surprised, and just mind blown, and just going like, wait, this is feasible, right? And it made perfect sense, because it was just kind of this offshoot of the share economy, right? And for those people that aren't familiar, the share economy is something similar to, let's say, Airbnbs, right? So you have this sort of system, or this system called Airbnb, and they don't own any infrastructure, but other people do, right? Other people tend to have, let's say, spare houses or spare rooms. They're just, and they can enter the Airbnb system just utilizing their spare room, right? So they're able to sort of like, they're able to provide housing, etc., accommodations for people for short-term stay. Same with Uber as well. Uber don't own any cars. Well, I'm sure there's quite a select, small fleet or something, but in general, the business model is just utilizing the existing cars of other people that are happy to join the Uber network. And same with crypto. If you have a computer at home and it's idle, you can turn those idle moments into, capital, right? So it's kind of the same sort of So once I discovered Bitcoin, and I was quite fascinated. It obviously, I delved down the route of just, Ethereum, what's this with smart contracts? And again, just mind blown times two again. And and it all kept on sort of, it made sense, right? Because it's just a natural evolution, right? I mean, sending value from person A to person B with no intermediary parties on this decentralized global network that's distributed, and there's no central party or authority, and you actually get to keep custodianship of your assets. Fantastic.
Right.
Now, adding on to the fact of just then adding all these sort of derivative sort of financial instruments as well, right? You've got lending, borrowing, DEXs, you've got the derivative platforms. Like it's just it's incredible. So yeah, once I got into that, I obviously discovered Cardano through the very infamous whiteboard video by Charles, which I thought was a very sort of it came off as just one of the very few instances of just, hey, let's not just move fast, break stuff. Let's just think very, very slowly and very cautiously, and also very what's the word I'm looking for? Very thoughtfully in regards to how we implement these things, right? And it looked like Cardano, just off that clip, it had really just a very calculated and strategical sort of pathway to just global adoption. So
that's kind of how I got into it as well. I had the idea that I was working in startups, or even everybody was adopting that startup mentality where it's like, oh, get something out, throw
100%.
it against the wall, see if it sticks. And then it was like bugs all over the place. And I just really resonated with okay, let's take a step back. Let's be thoughtful. Let's build, a system that can withstand nuclear blasts and in the financial world and still be okay. And that's the same thing kind of resonated with me about Cardano. I came to it a little earlier than you did. It's kind of fun seeing, like, I kind of view you as the next generation. So there were the OGs who were like way back in the Byron days. And then I kind of came around in the 2017 bull market cycle. It's like, Bitcoin is doing something. It's like, maybe I should think about this. And then I came to Cardano at that point. And then it's fun to see guys like you that came around the cycle after that. That's like, oh yeah, but the same kind of pathway. Anyway.
Yeah. And things have changed. Things have changed so much. Like, it's always, every year, it's like just yeah. Incredible.
Yeah. Things change. The narrative changes. Yeah. The tech changes. We've got crazy LLMs happening right now. Like this week, I've been actually learning. It is a skill you have to pick up. I've been learning to vibe code quite a bit. So I've been working on a new specialized blockchain indexer. How do LLMs play into your development life?
I mean, as you said, it's like actually funny enough. There, if you go on obusd.com, which is OBUSD, it's the USD peg stablecoin from Obymare. That entire site is vibe coded. So obusd.com is a website where you can type in just a couple of key metrics in regards to utilizing Obymare, right? Like what ADA do you what's your ADA deposit, what's your staking rewards for that said ADA, right? And just what's your CR, etc. And you get to sort of like get this calculation of just like what the safety margins are, or like what your position's looking like. That is an instance of me just. And within like, I think a couple of minutes or so, it just, the entire thing, right, from start to finish. And, and that was using Claude. But giving a more detailed response though is, it's crazy. It's like, I think with the advent of LLMs and just AI in general, right, and I might just use those interchangeably. When I say AI, I'm probably referring to LLMs, which I know it's a type of AI. There's other sort of generative types, etc. Diffusion models, etc. We've never seen a paradigm where there's some tool that does everything on a software basis, right? We've kind of never seen a paradigm, and it's funny because like I think it was until about a year and a half ago, or about 2 years actually, that I started using it, because it just wasn't good enough until then. Until I think about Claude 3.5. I think Claude 3.5 was kind of the magic moment where I'm just like, oh, this actually has use and utility now, right?
Right.
And but it's very clear that it's getting to the point where LLMs with each foundational release, right? When I say foundational release, I mean these massive foundational models that take just a lot of capital to actually train, right? So whether it's Grok, whether it's ChatGPT, whether it's Claude, whether it's Google Gemini, whether it's DeepSeek, right? Every single couple of months, about 6 months or so, we're seeing just very noticeable improvements. And these improvements aren't just in they're not just a factor of 5 or 10% better. It's like it's getting better, faster, smarter, and it's also expanding the list of things it can do as well, right? If you can on just a simple chatbot, right, you can upload PDFs, images, songs, etc., like written word, text, and it's very handy. So for debugging code, I find it extremely handy, because for the most part, anyone that programs will tell you you'd spend more time debugging than actually writing code.
Yes.
But it's also good for both as well. So
I do find a little bit that you still have to be a good coder to make sure that it's doing what you want it to do. And then I also find that it's a good idea to force it to write tests and other things that also can let you check the system that it's built. So it's kind of like it still needs a little bit of oversight, but definitely improves the ability to perform as a developer at this point. I don't think we're quite to where we want just a random business person to write code, but you could definitely see where it could eventually get there with the right set of prompts and the right models.
I think you'll need and this is just me assuming that AGI doesn't come, or it's not coming in our lifetime, which I think there's probably a really good chance it's coming. And the term AGI gets thrown fast and loose, but to me,
let's go all the way down the rabbit hole here.
But I think very simply, the definition of AGI, to me at least, is when we don't argue if AGI is here, because that's as simple as to me.
That's interesting. It used to be, if a computer passes the Turing test, then it's like, no, we long past that point of the Turing test.
It's because you wouldn't hire, you'd still need developers. You're not going to hire this is ChatGPT's first day, everyone, introduce but you still need that. You still need a competent person just guiding it, right? So and maybe it gets to the point where it's assuming AGI doesn't reach isn't here in our lifetimes. Maybe it just gets to the point where to write full-blown just enterprise level software, or just really anything, right, that's even semi-conventional, because obviously trading data sets, etc. You just need a couple of thousands of dollars of cloud credit, right, in Amazon or something. And I actually wrote a blog post about this through Big Blimp, right? So just welcome to the $10,000 protocol era, right? Where it's like you're able to just as I said before, you're able to just write code that competes with VC-backed chains, just for basically pennies on a dollar, right? Because you just have a body of work, etc. So it becomes a case of there's no longer any technical moat. The technical moat is gone. It's just more of a regulatory moat, or a specialized knowledge moat, as health records or something, right? Or the third thing could be a capital moat, right? Like if you have a DEX, you need millions of dollars of TVL to make it worthwhile swapping, etc. So that technical moat dying is something I think a lot of people don't quite realize is coming very soon. So
So let's jump back to Obymare. Again, Obymare is a dollar-pegged CDP-based stablecoin. How does somebody interact with this protocol? Give us, I guess, a few background pieces of information too, like where is it at in development? When is it launching? All that stuff.
Yeah, so at the moment, Obymare is live on testnet. So if anyone's interested, they can either Google Obymare or just go to www.obymare.com, and they can try out the bit of indigestion. They can try out the dApp themselves. So we've been building Obymare now for about 18 months. It's been a bit of a background project initially, and then obviously when we were closer to announcing something, when we were closer to having more tangible things, we announced it. And yeah, it's been 18 months of just pure passion and just going at it. The source code it's open sourced. So the on-chain component, which is the part that people should really care about, right? Where you can verify that the validators are doing exactly what they're meant to be doing, as is written in the light paper and white paper. It's also audited as well, so open source audited. We also ran a bug bounty, which is also still ongoing as well. Like we had 1 month of just sort of continuously yelling out, "Hey, it's here. Please look through our code base, etc." Right? We did get one small. It was a discrepancy between a parameter setting that was listed in the light paper versus what's actually on chain, right? So that was, we would have found that out, on the way to mainnet, but it was still good for someone to catch that. So that was quite handy.
Right.
But yeah, but with Obymare, in general, if you want to try it out, please go on the website, give it a shot. Testnet is live; it's going through, and we're constantly collecting feedback. In regards to your second question in how Obymare works, from just a sort of quickie, high-level overview, right? Obymare allows people to leverage their ADA, right? So with Obymare, you can come to the protocol, you can deposit your ADA, and you can use your ADA as collateral, and you can mint OBUSD. Now, when you mint OBUSD, you have two things to worry about. You have your MCR. MCR stands for minimum collateral ratio. This is basically just the level where you have to maintain so you aren't liquidated, right? So in Obymare's case, as I said prior before, it's 130%, right? So that means whatever you borrow, let's say in this case it's $100, right? You have to provide 30 cents, as in 30% plus, as a buffer, right, at all times. So in the case of the $100 of OBUSD that you borrowed, you're securing that with $130 or above, preferably, of course, of ADA, right? So in this case, you come to the protocol, you deposit your ADA as collateral, you mint OBUSD, you have to worry about the MCR, and you also have to worry about the redemptions. Now, redemptions is a bit of a full gritty sort of thing. I will obviously expand on that, happy to, etc. But redemptions is basically someone coming in and paying off your debt with OBUSD and collecting your collateral. Now, this isn't a net loss, to be specific, right? It's just you lose exposure, but it's obviously very inconvenient, and you have to go back to the system and just re-borrow again, right? So redemptions are there because OBUSD, this allows OBUSD to always be redeemable for the underlying ADA collateral, aka a dollar of value, right? And redemptions are kind of there to curtail demand, right? So because there's no expanding interest rates, it's just a one-time fee, etc. The way things work in regards to supply and demand in the system is when there's an oversupply of OBUSD in the market, that's obviously going to result in a depeg. That depeg is then sort of resolved through arbitrage, and that arbitrage occurs when someone buys the excess OBUSD on the secondary markets, DEX, and they go to the protocol directly and they redeem it for the underlying value minus a very small redemption fee, right? So it's all part of the system. So redemptions are very neutral in effect. It's just kind of there to maintain, it's just there to maintain stability, right? This is also a good news for the holders of OBUSD, because you can, and again, it's on testnet, which is really nice for me to say, because I can just sort of point at exactly where you can go on. You can go to the redemption page and you can directly redeem your OBUSD through the protocol itself, right, and get the underlying ADA backing it, minus a small redemption fee. That redemption fee ranges from 1% to 3%. Right, depending on how secure the loan position is. Which another factor as well that I haven't mentioned quite yet is the way you combat redemptions is just being over collateralized. So the safer your loan position is in relation to other loan positions is where you'll be is how safe you are from redemptions. Right,
because the redemptions happen from the least safe position all the way to the most safe. Is that correct?
Exactly. So just to avoid redemptions, which also helps you avoid MCR as well, you just have a safer position. There's other, and this is relative to other positions. So if everyone's, let's say, 300% as the average in regards to just the CR positions, and you're like 290%, even though you're quite safe in relative comparison to everyone else in the system, you're the riskiest CDP position. So
So you'll you won't lose money, but you may lose exposure to that position as people redeem. Yeah.
Exactly. So just with numbers, for example, so let's say you borrowed $100 of OBUSD and you have $150 of $150 of collateral backing of ADA backing a position. If someone comes in your position and they redeem, let's say $50, right? You're fine. You still have the 100 of OBUSD, but now instead of owing the 100, you owe 50. Right. And if you check your ADA collateral, you don't have $150 worth of ADA collateral anymore. You have only 100 of ADA collateral. So you can just basically just borrow again. So there's no net loss. It's just you lose exposure. So you go from 150 of ADA to 100, and you go from owing $100 of debt to $50 of debt, and that's kind of basically it with redemptions.
Okay. Let's talk about, we haven't talked yet about the utility token, OBI. So in your light paper, you say there is no governance model for Obymare. It's a governance-free protocol. Talk a little bit about why you chose to go that path and what the utility of the OBI token is, as opposed to OBUSD or other parts of the system.
Yeah, of course. So Obymare has two tokens. As you've mentioned, there's the utility token, which is just called OBI, OBY, and you've got the minted stablecoin asset, which is OBUSD. With OBY is primarily a fee token and also a how do I say the word? And also a guarantor, for lack of a better term, a guarantor of last resort for stability in the system. I'll go into what that means. So it's a fee token in the sense of whenever you're minting OBUSD, whenever you borrow OBUSD from the system, you're paying a 1% fee based on the amount of OBUSD you're borrowing. That 1% fee is paid in OBI. So in the case of if you're borrowing $100,000 worth of OBUSD, you're paying $1,000 on top, with just in OBI, whatever the spot price of OBI happens to be at that time. Likewise, if you're redeeming OBUSD for the underlying ADA collateral, you're also paying that 1 to 3% fee in OBI as well. So that's the token fee aspect. Now, when I talked about so that's one aspect of it. The other aspect is just the security of it. So if you look in the analytics page of the Obymare testnet, you'll see there's actually an OBI treasury, which is a very sort of easy metric to sort of keep up with, how much value sort of stored there. Now, when a position is up for liquidation, so when a position goes below the MCR 130%, that's just a normal liquidation that occurs. Someone sort of comes in, they pay off the owed debt, and they collect the excess collateral. Right? When a position reaches what we're calling CCR, critical collateralization ratio, which is 103%. When it reaches below that, you actually have further incentives for liquidators, where a portion of the OBI treasury is used to pay off, up to 105%, is used to compensate liquidators, right? So liquidators still maintain a margin of profitability, so they can actually come in the system, and they can also
Otherwise, a loan would become too unprofitable to liquidate. So that's kind of the last resort liquidator. Okay.
Yeah, because with these bots, it's like we're not quite sure, and people have various setups, right? Like if they're sort of like, let's say for example, there's a bot that's connected to a bank somewhere or something, and that bank transfers to a fiat exchange, and then the fiat exchange blah blah blah. It's like you want to make sure that there's enough sort of margin, depending if they have to go through 3 hoops, for example. Like if they're swapping the ADA to like OBUSD, obviously there's going to be a fee there. So you just sort of want to have to make sure there's enough of a margin of profitability there. But that's essentially it, really.
Okay. So my next question is related to this pricing of OBUSD. I'm assuming there's some type of oracle involved, so we know how much value the OBI token has. What is the setup for that, and is there any potential oracle risk there?
Yeah, so at the moment we have an integration with OrcFax on the mainnet launch of Obymare. We also have, and this is one of the few sort of like, this is the only centralization point of Obymare, because we talked about before, there's no governance, so all the parameters are immutable on launch. And yeah, the only aspect that we have control over that's a centralized point of failure, and this is the commonality in most Cardano projects as well that require one, is we have a auth token that acts as a pointer for an Oracle solution, right? And that's just a temporary measure. So once eventually, hopefully, once Cardano gets to a mature enough point where there's multiple Oracle solutions, right, you can just sort of like, you can burn that pointer NFT, if you will. So yeah. But yeah, on mainnet launch, we'll have Orcfax, which is a decentralized decentralized Oracle provider, and we're hoping in the future, integrate with Charlie 3, just to see how that sort of goes, and just trying to sort of like broaden out that spectrum of like where we're getting our price feeds from. In regards to just quickly touching on the whole Oracle, touching on the whole governance aspect as well. We've gone through a no governance model. So it's similar to Liquidity, because we just think, and this is controversial because it's Cardano, of course. I know we don't think that governance is quote unquote not necessary for like everything and anything, right? But we do think very much it's an ideal case where you have no governance for your system, right? Because what governance is trying to solve is it's trying to solve for circumstances that people don't have the best outcomes for, right, or the best actions for, essentially. Like if you get into a car, if you're driving somewhere, etc., you don't have a governance action or a vote every single time you turn left or right, etc. Right? That's kind of the thought process I have, because if you built a system and you could cover all your bases in regards to like what would be the best thing to do in each scenario, etc., right, you would just automate it. So our belief is governance is really just a stop step towards automation, right? Because it's ideal to like have this completely trusted autonomous system in place, as opposed to just majority of it is autonomy, and then you just have this aspect of governance, which again, we're kind of dealing in these like crypto's been around for a while, yes, but we still are in this sort of this space of just newness, right? Like these systems haven't been tried and tested for decades. It's only been just over a decade, right? So it's kind of hard to say how things are sort of going. And I think if you can build systems that are resilient enough, and you have enough foresight, and there's enough data out there to sort of conclude, okay, these are the best steps to take for XYZ sort of scenarios, I think it's best to just have systems without governance. Liquidity would be our example. Liquidity has been running fantastically fine for 3+ years now, almost coming up to 4, and it's seen a lot of volatility in Ethereum's price and everything, right? So it's probably I would say the gold standard in regards to CDP positions, CDP-based stablecoin solutions.
Right. So since there's no governance, you're pretty much stuck with ADA as the collateral for this protocol. Could you see yourself copy pasting it then if something like a Bitcoin solution came to Cardano?
Yeah. We made an announcement about that as well. A bit of a not an announcement, a bit of a teaser, right, of the possibility. We called it OBTC, like so like it was OYTC, yeah, OBTC, because it would be a very simple thing to do as well. Like the code's there, and not just for us as well. Anyone can do it. Like so we've released an on-chain code base that's audited under an MIT license. So it's mine as much as it's yours and everyone else's. So more than that, sort of happy for anyone to sort of do that. But we could do that. We felt again very sort of similar sort of cues from Liquidity. It's like if you have the gas token of a layer 1 solution, that's like an index. It's an index fund, of course. It's the closest thing to like an index fund, right? Like a Nasdaq, Dow Jones, or an S&P 500, where any success of any product of all protocols on it, or any protocols, you're obviously it's going back to ADA or whatever gas token it is, right? And obviously it's got the most. It's also got the most liquidity, and also just the most trust and security in just different avenues.
Absolutely.
So I think just from a conservative standpoint, especially if you're going for this no governance system, you probably want to build with the safest, just the most reliable, and just the most widespread and liquidity filled sort of asset. So yeah, but to answer your question, in the future, 100%. If the community demands it, if there's demand there for it, why not?
Absolutely. Well, I want to thank you for joining us today, and I hope people learned a lot about Obymare. Again, give us some of those websites and links where people can learn more about it. And one final question is, when Mainnet?
Oh yeah, we have I won't say the exact date, but
Yeah, of course.
we've pretty much, yeah, but we've, we have like an internal date for the team, but we are very adamant and we are working very, very hard to make sure that after the token sale, so we have the the Obi token sale that's been announced recently in the 20th of this month. We want to make sure that Mainnet is followed up very, very shortly after. So we're not talking months, we're talking weeks, right? And we're talking as few weeks as possible. So obviously with safety being obviously still, if it's not ready, it's not ready. It is what it is, right? But at the point that we're in, and the fact that we're doing a sell in general, we are, again, we're very much close to that sort of, range, right? So I would say Mainnet, couple of weeks out post a sell. And I think hopefully people will be very pleasantly surprised, because even if you have and I won't go on a bit of a rant about this, right? But even if you do have this like polished testnet experience, it doesn't guarantee mainnet, because you need to.
Correct.
Yeah, people really don't realize that, right? Because like there's a lot of extra security checks and just things you have to account for, because like you're going live and there's going to be a lot of capital at stake, right? And I don't know if we've mentioned this or not, but like we are getting a second round of auditing going on as well, right? So that will be shortly after we launch. So like, let's say, for example, there is this vulnerability that's caught. We can go, hey, everyone, please withdraw all your stuff, etc. Like, withdraw all your capital. We are fixing this huge, crucial exploit, and we'll relaunch afterwards, right? Obviously, not an ideal situation, but it's much better to catch it in the first couple of weeks where there's no TVL. So there's very, in relative term to what it could be, there's very little TVL at risk. Right. So yeah, that's kind of what we're sort of going for. So we want to have at least, ideally, I want to say, I want to sort of also be ambitious, at least 3 audits. So 2 more audits on top, because again, it's like there's no governance here. There's no, it's very much a case of just like we want to do it first, and we want to do it right.
Yeah,
and
absolutely.
we've been building for 18 months. It's like what's 1 or 2 more months, etc. Right. So yeah. Anyhow, but yeah, to answer your question very shortly, our plan is a couple of weeks after the token sale and just getting it out there.
Awesome. Well, again, thank you, Brandon, for stopping by, and thank you for sharing about Obymare. And I will put all of Brandon's links and everything below in the description for you guys to learn more about it. Maybe check out their light paper as well, and all the other protocols, cool things that they're building at Big Blimp. And
thank you for having me.
And with that, nerd out.